Okay, good afternoon, guys. Yeah, sorry about that. Didn't realise the microphone was on. Good job I didn't go into one of my standard of roughly rants about anything. Okay, guys, well, welcome to this trading clinic. We're going to specialise on the US dollar versus the Japanese yen. A bit of movement in the markets today, so we can talk about that. But the standard webinar format, as always, I'll go through in a second. But it's an open forum, guys. So ask anything you want about any particular product that you're interested in, that you may be struggling with support and resistance. Again, I can talk about any fundamentals you want, any kind of technicals. You know that I've got very strong views. I don't pull any punches. And again, if I see any good opportunities, then I will trade the markets live. Just coming back off the non-farm payroll session that I had. We had 300 people registered, over 170 people attended. So we're getting some good traction and people are starting to listen to my particular view on trading. And also, more importantly, the style of trading that I adopt. The higher time frame or smaller time frame level that, again, I'll be demonstrating today as always. Let me go through the basics, a quick 2 or 3 minute PowerPoint, then we'll get into the action, guys. So before I start, as always, guys, need to remember that spread betting and CFD trading both carry a high level of risk of capital and result in losses that exceed your initial deposit. They may not be suitable for everyone, so please ensure you fully understand the risks involved. The information and comments provided herein under no circumstances are considered an offer or solicitation to invest. Nothing herein should be construed as investment advice. The information provided is believed to be accurate to the date and time it is produced. Again, educational only, guys. Content of the webinar is personal opinion of the moderator, nointrader.com. Content does not constitute financial, investment or tax advice. You're advised to discuss any, InTrader does not accept liability for the consequences during this session. Okay, so what we're going to cover. Well, as always, we're going to do live charting analysis. So the higher time frame charts on the lower, more manageable time frames. Obviously, we're going to talk about any kind of fundamental analysis you want to go over. So again, all the things that are happening the world over. I've got a very kind of recurring theme between the US and the European markets that we've gone over in the majority of sessions. So maybe if there's different people with different views, you can bring that to the table. Then we're going to do a live real money trade if we see anything of interest. But again, if we don't see anything particularly of interest, we're going to sit on our hands. There's no point just trading because we can. Then there'll be a Q&A session pretty much throughout this session. If you want to ask me any questions on the technicals, fundamentals, or again, any particular individual product, as long as it's supported on Metatrader, I can chart it and I can tell you instantly where support and resistance is. Okay, guys, so like I said, if you've got any questions, we've got the chat window and the Q&A window. Again, there's no right or wrong questions, no right or wrong views here. You know, it's an open forum. We can all learn from each other, so please put them through. So here we have the markets right now as we talk. So we can see the S&P has really had a bit of a sell-off before the US session has opened. We can see that the euro's quite weak against the pound, coming to quite a key level of support down here at 0.85051. If the market breaks through, then the market's going to get down, I would suggest, by the close of play today to at least 0.84889. The majority of the other markets are moving, really in sync. We see the Aussie versus the dollar's had a bit of a bounce, bounced off some lows down here, and we can see, obviously, we'll go to the dollar versus the Japanese yen in a minute because we'll go through that in a bit more detail. So anything else you want to go through, guys, I can tell you where support and resistance lies. I can tell you anything else that you want to go through. So let's focus on the dollar versus the Japanese yen. So quite interesting that obviously we've seen the non-farm payroll last Friday came in just only a little bit better than expected. So nothing ground shaking at all. But the market again took that as a sign that the US economy was doing well, and the market rallied. So it was an interesting figure because it wasn't out of line enough on the downside to make sure the Fed have to stick by the quantitative easing policy. And it wasn't out of line on the good side. Okay, it wasn't over 200,000, I would suspect, to make the Fed take a stance that quantitative easing, can be brought to an end and that maybe it's time to kind of step back a little bit. So the inline figure was quite a difficult one to trade because it's giving out no clear-cut signals. It's more straight down the line signals that the market doesn't really know what the fundamentals and what the Fed is necessarily going to do next. Okay, so that's why the markets really took its time to make a decision that it was going to rally on the back of that news. And then again, the European markets and the UK followed suit. However, the markets over the last few days have sold off yet again. So if you listen to any of my other trading clinics, I called it pretty much the top of the DAX and the Eurostoxx quite some time ago. I'm still expect the European markets from here on in to make significant dips back into the main range. I don't really understand why people are buying the European stocks and why they're being pushed up. A lot of the kind of fundamental side of it is that really the major central banks are propping up the European indices and that they're just following the US suit. But I see plenty of gains to be seen in the US market, and I see some real divergence coming back in to that between that and the European markets, because you've still got incredibly high unemployment in places like Portugal and Spain, even Switzerland feeling the pressure. I just don't see any major future in the euro. And you know, as high as things go up and as much as people want the euro to kind of succeed, you know, the US is one solid, defined nation. It has one race of people, it has one central currency, and you know, the majority of the world's commodities are priced in dollars. Some of the biggest reserves are held outside the US of dollars. So it's in the world's interest for the dollar to sustain and the US to continue marching forward. The European Union, on the opposite hand, doesn't have any of them characteristics. It's separate member states. If you ask an Italian person, are they Italian? They'll probably say, no, I'm Sicilian, or I'm from Milan, or whatever it is. It doesn't really make any difference. You know, the US are all one, you know, combined country. Although it's very big and split into states, Americans still, first and foremost, class themselves American. You can't say anybody says, I'm a European. It just doesn't work that way. So I see a massive divergence that's going to happen over the coming next few quarters, and I do see these Eurostoxx and the DAX and the CAC really never getting back to these highs, or not for the certainly foreseeable future. So we can see in the dollar versus Japanese yen that we've really we came up aggressively, back in early June, and the market really looked like it was going to really kind of correct and continue to make these lower lows. But really, once we gapped higher, the market then recovered, and again, as gaps tend to do, we closed the gap round here at 97785. So it's really down for the market to decide what it wants to do. So we're really approaching a key technical level. So 96.186 is a 50% Fibonacci retracement of this particular, I would say, down move. So that's one very, very key point on the hourlies. But the best thing to do when you want to look at what's going to happen in a particular product is start on the highest time frame you can and then work backward. Okay, that's the only really way that you can understand what's happened in the past to understand what could particularly happen in the future. Now, this chart may look complicated with the various dotted lines, but it's not. Okay, these are just higher time frame points of interest, so monthly, weekly, daily levels of interest put on a smaller time frame. It's no more revolutionary than that. Okay, it's a little bit more behind the scenes that go into it, but essentially this is higher time frame trading on smaller time frames. Okay, that's how you get sense of what's happened in the bigger picture and zoom in to what's happening right now. And you can factor in the fundamentals, you can factor in anything else you want, but what will always happen is that the higher time frames will come into play at different points in the trading arena. Okay, so if you start in your monthly levels, okay, it looks quite messy. Okay, I'm not going to apologise for that, because that's just the way it is. You get to see every time frame and point of interest on the chart right now. So we can see that really on the monthlies, the market is looking quite bearish. Okay, we reject the highs up here. Okay, at 135.19, way back in December 01, then the market really, after that, makes a poor attempt to get back to the highs here, and then from then onwards, the market's really kind of made its way down all the way down to 76.127. So on the monthly charts, you can see that really the overall trend is still bearish, but we've seen a good bounce. Okay, the market's trying to bounce, come down, and then again, we've seen good, solid months worth of data. So remember, each candle is a month here. So the data of the market's buying itself back up. So if you want to see where the market's trading in any kind of real value, just take a Fibonacci from the highest to the low there and look for that key 50%. Well, time and time again, what do I say? An extended strong move will eventually get back to a 50%. So really in the monthly charts, we've hit that 50% and come all the way down. So What's that telling us? That's telling us that the monthly trend, okay, is downwards for me. Even though we've recovered, we're still going to see people looking to sell the dollar against the Japanese yen. We've rejected a close above the 50% retracement of that entire move down. So really, for me, the market in the coming months is going to look to come down to these further levels and back to 88, maybe 80, and that range on the monthlies. Flick it to your weeklies, and you see a slightly different picture. Okay, you negate all that massive downward move on the monthlies, and really on the weeklies, we're actually looking pretty bullish. Okay, a lot of green candles here, and the market is really, rallied us, quite significantly, making these higher highs and not holding on to any of the lows down here. Okay, until the market has reached up here at 103 spot 400. But again, then we see 1, 2, 3, 4 weeks of selling on the weekly. So higher time frames are telling us we've recovered, some of the losses on the huge monthly down move, but the weeklies is the kind of the opposite, that we've kind of in the short term or the medium term seen the market rally, and now the market's trying to dig back into that weekly value range. And again, we can see the Fibonacci on the weekly move at 96.050 is almost going to be tested. So the weeklies are giving us that little bit more information that, okay, if the monthly trend is downwards and we've recovered, so the trend should continue downwards, the weeklies are giving us an indication here. If we close below 96.050 on the weeklies, that market can get all the way down to 92 and even 88. Okay, so that's starting to be backed up by the monthly time frames looking on the weeklies. Let's zoom in further to the dailies. Okay, so the daily's a bit of a different picture. We can still see that upward movement we saw in the weeklies, but it's a lot more structured. Okay, the market goes up, see some profit taking, find support, market finds support on good levels across here, then the market really moves up in waves. But again, this is starting to tell me now, yet again, that the market has reached a peak on the dailies, and we can really see that the bulls are starting to come into the market here. So the dailies gives you a little bit more clarity. I would say that 99.376 are telling me that that was good support at one point, but is now key resistance. Okay, so the next levels we can expect the market to get to in a more manageable daily time frame is definitely down here, 92.560. Okay, that's screaming out to me to be the 100% of the up move, and that's on the dailies. Okay, backed up by my weekly and monthly analysis. How will you trade that right now? You go back to your hourly chart. So all that looked quite messy on the hourly chart seems to me to be instantly a lot clearer. Okay, so we're getting a lot of different kind of indicators from the monthly chart of what could potentially happen, because there's not been any key fundamental change in direction. We've just had a down move that tried to recover, and now the down move seems to be continuing on the highest time frame we're looking at right now, which is monthly. On the weeklies, the same kind of picture. The market seems to have reached a point, and we've had 4 sustained candles, weekly candles of selling. The daily seems to show the same picture as that. So what we're looking for key points of resistance, so any line in our chart excuse me, to act as resistance. We're trying to sell the highs and then find levels on the low side that the market is going to drift down to. So from this point here, we'll find that on the hourly move, the 38.2% retracement of this down move seems to be a level of resistance. The market closes above it here twice on the hourly candles, but can't hold on to it. So the support that it should show is really resistance, resistance, resistance. So where will it want to hit? Well, it's going to want to hit 96.186. That's a 50% retracement. 80% of the time, an overextended move or strong directional move will hit 50%. Okay guys, any questions or any thoughts so far? We're very, very quiet on the chat and the Q&A window. Does everybody start to see how you build a picture from the higher time frames and then zoom in? Okay, just like a camera, you're zooming in. The closer you get, the more in-depth information you're getting. Now, if you want to, you can break this down and go even further to the 15 minutes. I wouldn't recommend you go any lower than that, because you're going to get too much information. Okay, so I would say the 15 minutes you can use really is the lowest point of entry, okay, to define your entry point. But your hourlies are really where you have to be looking at. A lot can happen in an hour. And if you're not paying attention to the hourly candles, you can get squeezed out of moves. So really my analysis is that we're going to find resistance and have found resistance around about here at 97.045 in the dollar versus the Japanese yen. And I see it's going to drift down. And all these points here are going to be points of attraction. Okay, so the darker or the red nature of the line means the more important. So for me, the 50% is absolutely pivotal here in the dollar versus the yen. So 96.186. If we test, break and close below it on the hourlies, the market for me will definitely hit 95.312. So we're finding that the market shouldn't break in to this value range here. Okay, it shouldn't really break back into here. So once we start testing the lows here, so 60 ticks to go, yeah, for this dotted Fibonacci level here, and then 86 ticks here to go. But once we do, and we close below these levels, the market's definitely going to break down to 95. Okay, so, sorry, Maverick's just saying that he can't hear. Can everybody hear correctly? You know, more, just let me know that you can hear the sound. Everyone can hear correctly. Okay, so it's just Maverick. Okay, guys, well that can happen. You know, that's the internet, I'm afraid. So, question just coming through from Joan Brown. What is the low and the high for that 50% fib? Okay, the 50% fib, the low to the high, on this particular example, is this point here. That's the high, okay, and the 100% is the low down here. Now, my Fibonacci's, okay, so the low with Fibonacci is 92.434. The high is 99.938. Now, the reason why my Fibonacci levels work, and the reason why you don't see my Fibonacci's like anybody else's, is I use my Fibonacci's on a basis of the RSI, the Bollinger Band crosses, okay, and a candlestick formation of a two candlestick pattern. So my Fibonacci's are always drawn at the high of a move, but not necessarily the high of a move that everybody else will draw them. And it's just because, again, that's my particular edge, my particular quirky way of interpreting markets. I like to see 2 or 3 things make the markets extend, and then do a Fibonacci retracement from that point, because that's when the markets broke out of value. So again, Paul Thomas is just asking, where would you place stops? Well, again, if you're looking at the hourly charts, if you're looking to take a short position, you want to be taking your short position somewhere really around here. Okay, so you want to be taking your short position anywhere between, you know, these dotted blue lines here and here, because if the market then breaks up back into this, you know, you're going to have to pretty much instantly get out. So you're going to be keeping a fairly tight stop. So anywhere above this 38.2% level, so anywhere above 97.079, if the market breaks back above that, you're going to have to get out, because the target is going to be the moving average, which is 96 ticks up, or the next Fibonacci level, which ties in with another, you know, level we've got in here. So really, you could go a point offside for no real gain. So you're going to have to really sell into the market. And again, it's going to be difficult because the market's going to eye up the low of this candle here, which ties in with this 50% Fibonacci level. And when it breaks, it's going to very quickly go to this 50% level. And we know that when the market quickly extends, people buy into these levels. So you could see a quick bounce. So it's difficult, you see, because what I would suggested is if the market closed below this 38.2, then you get short. So if you want to get short now, okay, you'd have to do it anywhere around these 2 levels, okay, of 96, 704, 96, 549, and then let the market test this 50% and really be patient, because it's going to have to be really kind of gain some more momentum to push it through to these further levels down here. So I'd keep a very tight stop if you got short anywhere below this fib line, because as soon as it breaks it, okay, then the market can push all the way up here. There's no dotted lines to stop it, no lines or points of resistance until these key levels up here. So for me, really, how would I advise people to trade this? What I would advise you to do if you were trading the dollar versus Japanese yen now is just sit out. Okay? If the market looks to be gaining and breaking these levels quickly, then get in for a short-term short, but watch out for the bounces on this level, because you want to be getting your profit out close to this level, because the market, in my experience, will bounce off this, overextend back to here, maybe up to here, and then the down move will continue. Because you very rarely do you see continued hourly sell-offs like this. Okay, the market then sells off quickly, like this point here, all the way down here, and then bounces back up before it then continues. I guarantee this here will be a 50% retracement. Okay, so from the high here to the low here, well, what do I say? Okay, it's not coincidence. The 50% retracement is nearly hit on these 4 aggressive down candles here, these 3 aggressive candles, sorry. And then we have a doji here, which can't hit the 50%, then the market continues to sell and makes a lower low. So again, guys, Fibonacci always comes into play to intraday trading. So realistically, what I would say is the market is going to gain traction and want to hit this 50% here, but it might then bounce off it, come all the way back up to 98 and then continue down. So only look for small shorts into this market. That would be my advice. So your stops will be above here. Does that make sense, guys? Does that make sense of the view of the dollar versus the Japanese yen? When the levels below it, again, when you start to see a lot of lines, you know the market's going to get congested. So it means all these are points of attraction for the market to move down to. But again, they quite easily can be looked at from the other side, and people buying into value. So really, you don't see the market looking aggressively, okay, to break lower until it breaks 91. The market eventually gets all the way down to 91 and breaks. It can get all the way down 300 ticks down to 88 because there's nothing on the higher time frames to support it. So really, you can see the market is trading very, very casually sideways, makes an attempt to move down, but can't hold on to these wicks here, these lower lows, recovers, but really now, again, is looking to move down. So the market from here on really is going to test the lows down here, okay, then it wants to hit this 95 level for sure, and then really it's looking that it wants to do 100% retracement, which is 423 ticks away, guys. So if you want to build a short position, start building it below this 38.2% level and gradually, over the hours, let it grind down. I don't think we're going to see a big, sharp move down. It's going to be a grinding move. So you have to be in it for the long term. Okay, remember, each one of these candles is an hourly. So we're going to look on the daily view. Okay, if this candle here closes below the 38.2, the same level in the dailies, then you might see a candle this level, or this size, okay, so that is 200 ticks, so 200 ticks from where it closes below, okay, is going to be here, which ties in the 95.3, so if you're looking for a 200 tick move, get short anywhere below the 38.2, and your stop should be above it, and then hold on as long as you can for that 61.8, 95, spot 312 level, okay, so that's monthly, weekly, daily, all on your hourly view. So it all starts to become a little clearer that this really, between the 30 and the 50, is a massive target to get short already. Look, we've broken through the 96.704, where we're going to look to test next, 96.549. Not rocket science, you know, them lines were drawn on from the second I opened my charts, and the second I shared the screens with you, and these have been printed in for months. You know, these lines are not being automatically drawn right now. This is areas of interest that the market will test, and you guarantee once it breaks 96.549, it's going to hit 96.54, and again, below that is the 50%, below that is 95.312. So down to you how you trade that and get involved. But again, it's all very well saying it now, but in 2 hours' time we could be trading down here, yeah, with 60 ticks on side, and we're all scratching our heads going, well, we knew the market was going to go down. Why did none of us sell it? Because that's the difficult part of trading, isn't it, guys? You know, trading's not easy. So what you have to do is build up your own kind of view, maybe look at the smaller time frames for an entry point here, but the bigger picture is we're going to grind down. So the market's going to break these levels, and eventually these dotted lines are going to become up somewhere where the market will bounce. So you either trade in one or two ways. Sell, that all these levels are going to be breaking until we find a point of interest, or pick out a potential low based upon the fibs, based upon the daily, weekly levels of interest, and look for the market to bounce somewhere. Okay, Carlos, well, the lines are drawn in because they're automatic, okay? So these are automatic weekly, monthly, and daily points of interest, okay? The dotted white lines are just a secret. It's not a secret, but it is my formula. They're all previous points of 50% retracement based upon an hourly, okay, Bollinger Band and Fibonacci cross. That's all they are. But they seem to work for me. So all these dotted lines, look, dotted lines here, these are previous moves. 3 of them indicate the top of the market. Where does the market then find resistance? This Fibonacci. Where does it break through? This Fibonacci. Where does it hit? This Fibonacci. Fibonacci is such a powerful tool because it's mathematical. It's the reason why your foot's the same size as your forearm, and it's something that can be interpreted any way you want, but it's set. The criteria, the Fibonacci extensions and retracements are set. They can't be changed, but they can be changed from where you interpret value to be. So that's why these lines are so personal to me, because nobody else, in my experience, has plotted the Fibonacci's like I do. Okay? So the dotted lines are just the darker they are, is the higher the time frame. So a light blue dotted line is a weekly. Okay, a white line is a daily. If you see a dotted dark blue line, that's a monthly. So the darker, the more relevance it has in the market. So it's no more complicated than that. The fact that it's automated and I can put it on any chart at any time frame, that's what's powerful. That's what's interesting. That's what gives you the confidence. But the basic premise behind it is not that complicated. And again, I'm very transparent in the way I look at the charts, and I'm very transparent in what I tell you. You know, again, I'm not trying to pretend I'm a great chartist, a great trader, or a great programmer. I'm none of the above. What I am is someone that's been in the markets for 10 years, and not just been a trader, but a risk manager, been a trading mentor for some of the biggest traders in the city. Okay, so that's what I've built all my experience on, and then I've just put it in Metatrader, which again is a free system, and I bring that to the table based upon my experience, and we go through the markets in a logical manner. Yes, John W. Yeah, I certainly do use trend lines. Let's try and find some examples. I think I've got some good trend lines in the S&P. Let's look on the dailies. Yeah, I mean, again, it looks a little bit messy because a lot of actions happen on the dailies, but these trend lines here work very, very nicely. Yeah, that's not a great example, is it? Well, let's try and find some better kind of trend lines. What do I put trend lines in? Yeah, I mean, to be honest, I usually use trend lines in when I'm actually kind of, going through charts in real time in like these demonstrations. For me, I don't really use trend lines anymore when I'm actually looking at the overviews, because I don't need to, because I know where the trend lines are, because they're all pointed out in colours. Okay, so red lines, danger, means we're going to sell. And that, again, that's 1641.75 here in the S&P is based upon a Fibonacci. Okay, so in the market, 1, 2, 3, 4, 5 times it tests it and can't close above it. What does it do after that? Breaks all the way down, hits my key fibs, hits all the lines of Fibonacci. I mean, that's beautiful. I mean, again, look, this is a Fibonacci that's drawn in a particular way that other people won't have done. So the Fibonacci shows that the market looks, closed outside the Bollinger Band, makes a higher high, draw a fib on. The market then moves sideways, makes higher highs, but look, can't hold on to them. Finds resistance at 1645.13, a previous fib, and then where does it look for? It looks for that 50%. Look how it comes down. Bang. Hits it. 50%. Uses the 50% as resistance. Red candle, red candle, red candle. Where does it find value? 1626.78. What's that? A 1618 point retracement. I mean, you can make your money off nothing else but Fibonacci. You could have no other lines on these charts and just have Fibonacci, and that will tell you where the market's going to find value. And you can use it as a point of interest on the way down or a point of support on the way up. Again, it just depends how you view the charts. And that's for trend lines. Trend lines are very powerful, but I'd only say use trend lines on the higher time frames. So let's take... what should we take? Let's take the S&P. Okay, so if you want to take the S&P on all time frames, this is how you set up your charts. Monthlies. Monthlies are moving between monthly levels of interest. Weeklies are moving between monthly levels of interest and weeklies. Dailies, the same. Okay, so look at the daily here. Okay, the monthlies are showing nothing but greens. Okay, so bullish on the monthlies. Weeklies, a lot of greens, but we've dipped back into value and bounced off the 1586.5 near enough. Okay, but then a red candle after that, so maybe kind of a neutral bias. And then again, the dailies, a lot of green, markets found support and bouncing back up. So really, you'd say bullish, no bias at all. More bullish again on the dailies, and then you move right over to your smaller time frames, hourlies, 15 minutes, 5 minutes. So your hourlies, what does that show us? The same picture. It gets a little bit complicated if you try and overlay too many Fibonacci's. If you do a Fibonacci from this point here, okay, from this formation here, yeah, and this formation here, they overlap to tell you a story. Okay, and the story is, once the market rejects the highs up here, it wants to hit 50%. It hits 50% and then goes lower. What else becomes into play? The 100%, the 161, okay? We don't get as low as the 2618 here, but then the market then finds support on here. So where is it literally or logically going to hit? Well, back to these three lines. So the market's going to go bid and hit 1632.5. Okay, if it doesn't, it's going to retrace all these wicks here and this really strong support and then hit these levels down here at 1620, 1617. So if you want to draw a trend line on this, well, on the hourlies, you don't really see any good trends, I wouldn't say. There's no good trend I'd like to draw there. But then go to the dailies. What the daily tells us, a bit more interesting. Let's get a daily trend line. We can draw a nice trend line here. Okay? So the trend line shows on the dailies, okay, support, support, support. So we're trading way above support now, above the 38.2. So really the market wants to break higher from here. Yeah, it's going to hit here. Then it's going to make new highs up here. So we've got 569 ticks to play with. But use these levels here, 1629 as a point of interest. And then this level here, 1650, spot 56 as a point of interest. And then you've just got the highs to go for. So that's the dailies. And again, you leave that dailies and switch on to your hourlies. You know, it shows you if the market rejects, okay, the lower Bollinger Band now and comes down, it's going to find support on here, on the trend line at 160584, or the market's going to continue in its overall upward trend that we identified in the monthlies and hit up here, the 23.6. So that's how you view it, guys. That's how you build your charts up. You know, it's easy to say it when you've done it for a long time, but if you start on the higher time frames, you give yourself a higher time frame point of view, the bigger picture, then you leave the lines on, and then you just flick through to your weeklies. If you don't see anything of interest, you know, you leave it out. You go to your dailies, look for your daily closes. They're key points of interest in the market. And then trade off your hourlies. Hourlies with a 15-minute entry. You know, again, I keep going through these things, guys, you know, and it still surprises me that people say, well, I trade off tick data. I trade off minute data. How can you trade off minute data? I don't know anybody here. Has anybody here got direct market access? Is anyone here a market maker? Doubt it. I'm not. Not anymore. I don't have TT. I don't have my direct, you know, trading key into the Eurex exchange. So I have to trade off a spread betting platform. So I'm giving up 4, 5, 6 ticks every time I press that button. Okay. So again, the S&P's got nicely bid from this level down here at 1626.78. So it's going to find some sort of support come resistance here at 1632.50. Okay, and that's your hourly chart. So see if you can build any patterns of your 5 minutes. Or if you're 15 minutes, you know, see if that brings you any clearer to the equation of what the market may do. But really, it's all about the hourlies for me. It's telling you your levels that it wants to hit. If it rejects these levels, it's going to come back to 1626.78, and if it breaks that, 1620.75. It can't do anything else. It cannot. These are the boundaries that it has to move between. It has no other choice to move with these boundaries. The market has to go somewhere. And it's going to move between higher time frame levels of interest. The smaller time frames, you're not going to draw formations like this on a 5-minute candle. Why would you? But you draw it in an hourly, but then you can still trade off your 5 minutes. Okay, Mr. C, what is green? Well, green is buy. Okay, so green is a point of attraction where the bias is likely to be the market will find support. And then red, conversely, is where markets are going to find resistance and the market might sell down. So again, it's just color coded as to how I program the parameters. It's certainly not an indication that you just buy at these levels and you're going to make money. You have to be more savvy than that and use your trend lines and use your other market oscillators in order to give you the indications. But again, look, all the closes in the S&P here on the weekly, the monthly and daily are telling me the market's bullish. The RSI, negative on the monthly, so very high time frame, but neutral on the weekly and daily. A little bit of red on the monthly and weekly MACD, but positive on the daily here. And then the stochastics, positive, positive, negative. So a bit of a mixed bag. You can take whatever you want from that. But the overall trend in the S&P is still up. Okay, so what we're doing is we're dip buying. So the market rejects here, closes, look at this level here, it's beautiful, 1626.78, resistance, support, and now it's bounced off that. Where's the next logical place for it to hit? 1632.50. So take a screenshot, guys, press print screen, paste that into a Word document, or paste it into Paint, and then just see in 1, 2, 3, 4, maybe 5 hours of trading time what these levels have done, where they've tested. Copy them out and put them on your own hourly S&P chart. Okay, I guarantee these 3 levels above where we're trading and these 2 levels below will have some significance, yeah, in the next 5 hours of trading. If they don't, well, what can I say? I'm not always right. But they will do, because the market can't do anything else apart from move between these points of attraction. And again, this isn't my secret trading formula. It's just the way I've arranged all the data that everybody's got access to in a way that I understand. So that's all it is. Everything else I'm using is basically a standard Metatrader piece of charting tools. You know, it's nothing bespoke. Well, there's a few things that are bespoke, but nothing really that I'm not telling you about that you couldn't do for yourself. Okay, so what indicator is that? Well, the indicator is Fibonacci. So there's key Fibonacci points when the market's overextended, that when they come back to, the good levels to buy at, or when they overextend to, the red, is there a good level to sell at? So it's no more complicated than that. And again, it looks, I appreciate that it looks great. I mean, that's very nice of you to say. And again, this is 10 years of experience, you know, just trying to make trading easier. So I can have any screen look like this, okay? So if I want to trade the S&P, I'm bored of that, I can't see any examples. Let's trade the euro dollar, okay? So what's the euro dollar telling me? Okay, the same kind of thing, okay? Higher time frames here, yeah, monthly, weekly, daily. So on the monthlies, in no man's land, okay? We're trading above the moving average on the monthlies, but we're way below this resistance, way below above this support. On the dailies, same kind of thing. We're looking to reach the upper end of the Bollinger Band and 1.36670, so we've closed above the moving average. And on the daily, very, very bullish. Okay, we're hitting the highs in this Bollinger Band yet again. So what do? We dip buy. So we look for when the market on the hourlies goes down. Well, it hits a level here at 1324419. When all these levels here are points of attraction. Hit, found support, hit, found support, hit. So we need the hourly chart to hit 1.33073 and hit and hold above. Then we've got targets above it. So the white ones are dailies, not that important, but wow, look, weeklies. If the euro wants to really spike against the dollar, it's going to hit 1.33530, because that's a weekly level. So look, these levels on the way down, when the market's coming down, should be support. Okay? Then they become on the upside points of attraction to buy into. So it's just as simple as that, guys. And if you look at it, these are the same dotted levels on every time frame. So you pick out which one looks the best to you. Okay? You've got a moving average on the 5-minute chart, so you can keep buying above that moving average. Or you can take a longer term view, 15-minute and hourly, and keep buying above the moving average here at 132667. Again, so it's having the same indicators and the same points of interest on all time frames and trying to make a view of it. But look, the higher time frames, all red stochastics, all red MACD, all neutral the RSI, one red and 2 greens on the close, so maybe the euro is going to spike up to these levels, and that's the better trade is to then short. So maybe the market pushes through the upper end of the Bollinger Band and the hourlies, hits these levels, hits 133530, doubt it can get up as high as 133849 today, but then it might be a good idea to short these levels and let it come back into the value, back into the range here, because Bollinger Bands, they don't like to be closed outside of. Look, close outside here, make a higher high, market then moves down. If I do a Fibonacci on that, it will have some significance. Guarantee it. Okay? Where's the 50%? Drag it out, bang. Support, resistance, support, resistance, support, resistance. Comes all the way down, major resistance here, but as soon as it pops back up, finds support, market comes down, makes higher highs. Okay, so Fibonacci, use it in a responsible way, and only really concentrate on that 50%, because that's going to tell you where the market's finding value. So the market's moved up, retraced down, it's closed above that 50%, so it wants to make higher highs. So all these levels up here are points of interest. You want to know where they are on the dailies, we'll go into your daily chart. So really, 13350 is a daily point of attraction. And if it breaks through that, 1338, 13433, yeah? But again, we found support on that 50%, so that market higher high, higher high. All that's been taken care of, so we're making new highs again. So again, it's going from the higher time frames to the smaller time frames, guys, and making it work for you. So, like I said, guys, it's all interpretation, and I can rattle through these things and make them sound easy because of my experience and because of, I designed this system. But, this is Metatrader. If you spend, 4 or 5 hours on Metatrader, you can have charts set up just like this. Put a little box here, here and here, and just click these tabs, and then you've got the same screen setup as me. You don't have the dotted lines, but you can put the dotted lines in yourself. Okay? Just start with your monthly chart, your weekly chart, and the daily chart, and transpose them onto your hourlies and 15s. Okay? So yeah, the top left on the charts of Ind is just stochastics, MACD, RSI, and the close. Okay, just pointing to little arrows rather than having them on your screens. So if you put the RSI on your screens, okay, we can do that quite easily. Put the RSI here. So insert indicator, trend, relative strength index. Okay, so relative strength index is telling you we're at. Just get the cursor on. Okay, we're at 59. So we know that 70 is overbought, oversold. 70 is overbought. So overbought means it's going to come down. Below 30 oversold, it's going to go back up. So this is the hourlies. So again, that's not the time frames we've got on. But that indicator, is telling me that the RSI is between 70 and 30 on the weekly, daily, and monthly. So if that daily RSI kicked up to here, that would turn red, indicating that the daily, the markets are overbought, so we're likely to see a sell-off. Okay, so just as simple as that. Okay. Anything else, guys? Anything else we'd like to ask or go through in the meantime? We've only really got about 4 minutes or so. Any other products we'd like to go through? Stochastics. Well, stochastics are just slow and moving oscillators. Okay, so again, if you wanted to put your stochastics on from Metatrader, you just do it in this way: indicators, oscillator, stochastics. Okay, press OK, and that's your stochastics. Okay, so when the stochastics are over 80 or below 20, it moves very much the same as RSI. So when the market is above 80, that's saying that the market is ready for a change down. So that would mean that the stochastics on the hourlies, okay, are really just neutral, because we're not trading above 80 or below 20. So if the market then spikes back up here, okay, to 85 or 88, then the market is looking to be overbought and come back to value, so we'd sell back into it, okay, to come down another 40 points or so back to value. So the stochastics, MACD, RSI are just oscillators when the market is overextended and overbought or oversold. Okay, so these points or these charts you can have on just like this, but instead of me putting my charts up and taking space, it's just an arrow. Okay, so currently now on the daily, weekly, and monthly, the stochastic wise, they're all above 80. So they're all trading above this line here. Okay, it's a pointing that the market's, for me, a little bit overextended. Staying the same with stochastics. So I'll be looking again to be shorting some of these highs up here. So again, guys, different views of how you want to build it up and how you want to do it. But all these indicators are all available for you on Metatrader for free. Okay, they're not nothing secret to them, but it's just arranging your screens and your size and your timescales accordingly, saving yourself space. There's no point of having every chart open with every oscillator on it, because you'll get too many conflicting signals. My message is, keep trading simple. Make it work for you. Okay? Okay, do you use the standard settings and all time frames for stochastics? I use all the basic settings of every single oscillator. So MACD, RSI, stochastics are all basic Metatrader settings. The same with the Bollinger Bands. 20 period, 2 standard deviation. And the reason why I do that is because that's what everybody else is looking at. Boffins, these clever people that like to do weird and wonderful settings on their oscillators, again, that's personal to them. Only they're looking at it in that way. If you look at what everyone else is looking at, you've got a level playing field. Okay, so that's the way I look at trading. Trading's not about knowing what other people don't know. It's knowing what everyone else is looking at and then going with them when they're right or going against them when they're wrong. So why mess with the standard settings of oscillators? Don't see the point. Okay? Alright guys, well listen, anything else you need to know, do follow me on Twitter at Steve Ruffley. Again, I'm generally posting out Bob levels and I do screen prints and send them out to the market. So if you want to know where the levels are, just ask me. Just ask me guys and I'll always help you out, I'll always tell you. You know, again, I have nothing to hide here, no secrets. My lines, my levels work because they're higher time frames. They're what everybody else should know what to look for. But people don't arrange the charts in this way and get themselves confused. That's all it is. Listen, guys, thanks for the questions. It's been absolutely great. Cheers to Vicky and Maud and the guys at FX Street. Good to see some familiar faces like Panel Fire and who else have we got? And John. But again, guys, you know, if you do like what you see, please, you know, share your experience with your friends. You know, let's try and get these numbers as big as we can, because the more people, the more questions we get, the more view we get on the market. So the more things we can open up and see what other people are thinking. Alright guys, well listen, like I said, you know, Google Steve Ruffley, I'm not a difficult man to find. If you've got any questions, I'll be doing plenty more on FX Street, so do look out. Okay guys, thanks for that. See you all very soon. Have a great afternoon.